Welcome back to the channel, traders and market enthusiasts. Today, we are taking a massive journey into the heart of the most liquid and dynamic financial arena on the planet. We are exploring the foreign exchange market through the eyes of one of its most respected strategists. We are going to break down the comprehensive guide written by Kathy Lien, titled Day Trading and Swing Trading, the Currency Market. If you have ever felt overwhelmed by the sheer speed of global currencies, or if you find yourself constantly caught on the wrong side of a major trend, this deep dive is crafted exactly for you. Grab your favorite beverage, pull up a comfortable chair, and let us embark on a storytelling journey through the mechanics, the strategies, and the psychology of trading global money, the awakening of the retail currency trader. For decades, the foreign exchange market was a highly exclusive club. It was a walled garden reserved solely for colossal commercial banks, multinational corporations, and secretive hedge funds. The average person simply did not have the capital, the technology, or the access to participate in the exchange of global currencies for speculative profit. But as Kathy Lien eloquently explains in her opening chapters, the dawn of the Internet fundamentally democratized this landscape. Suddenly, retail traders sitting in their living rooms had the ability to leverage their capital and trade alongside the giants of the financial world. However, with this incredible access came a brutal reality check. The currency market is open 24 hours a day, 5.5 days a week. It moves with a ferocity that can wipe out an unprepared trader in a matter of minutes. Lien wrote this book not just to invite you into the market, but to arm you with the institutional knowledge necessary to survive it. She paints a picture of a battlefield where ignorance is immediately punished, but where disciplined, well-researched strategy is handsomely rewarded. To trade currencies successfully, you cannot just look at a chart and guess. You have to understand the fundamental engines that drive capital across borders, and you must master the technical timing required to enter and exit with precision, the invisible hands moving the market. Before we dive into specific entry and exit tactics, we have to understand who we are playing against. Lien takes us behind the curtain to reveal the major players in the currency game. You are not just trading against other retail traders. You are swimming with massive institutional sharks. Commercial banks facilitate the bulk of global daily turnover, trading not just for speculative profit, but to serve corporate clients who need to hedge their international business operations. Then you have the central banks. Lien emphasizes that central banks are the ultimate architects of currency trends. When the Federal Reserve in the United States or the European Central Bank decides to alter interest rates or intervene in the open market, they are not trying to make a quick day trading profit. They are trying to steer the economic destiny of entire nations. As a retail trader, your job is never to fight a central bank. Your job is to identify what the central bank wants to achieve and then hitch your wagon to their massive gravitational pull. Understanding the mandates of these institutions, whether they are focused on fighting inflation, stimulating growth, or maintaining a specific exchange rate, is the foundational secret to swing trading success. The fundamental engine of money many retail traders make. The fatal mistake of relying entirely on technical chart patterns while completely ignoring the fundamental reality of the world. Lien argues that fundamental analysis is the true engine of the currency market. While a chart pattern might tell you when to enter a trade, the fundamental backdrop tells you why the trade is happening in the first place and how far it has the potential to go. At the very core of fundamental analysis is the concept of interest rates. Capital is naturally lazy. It wants to flow to wherever it can earn the highest return with the least amount of risk. If a country raises its interest rates, global investors will flock to buy that country's currency so they can invest in its higher-yielding bonds. This creates massive demand, driving the value of the currency upward. Lien teaches us that tracking the interest rate differentials between two countries is the most reliable way to determine the long-term trend of a currency pair. If you want to hold a trade for days, weeks, or months, you absolutely must know which direction the interest rate winds are blowing. Economic indicators and the news cycle. Of course, central banks do not change interest rates based on a whim. They rely on hard economic data. This brings us to the thrilling, often chaotic world of economic indicators. Lien dedicates significant time to breaking down the data, points that truly matter to the market. Not every news release is worth your attention, but certain reports are guaranteed to ignite massive volatility. The undisputed heavyweight champion of economic data is the United States Non-Farm Payrolls Report, commonly known as NFP. Released on the first Friday of every month, this report details the number of jobs added or lost in the American economy. Because employment is a primary driver of consumer spending and inflation, the NFP report dictates the future moves of the Federal Reserve. Lien describes the moments leading up to an NFP release as the calm before a violent storm. She advises traders to understand the consensus forecast, what the market expects the number to be, and to look for massive deviations from that expectation. It is the surprise factor that creates tradable momentum. Other critical indicators she covers include gross domestic product, inflation measures like the Consumer Price Index, and retail sales figures. A masterful swing trader builds a narrative from these data points to predict the next central bank move. The rhythms of the trading day. One of the most fascinating aspects of the foreign exchange market is its continuous, rolling nature. Because it spans the globe, the market never truly sleeps, but it does change its personality depending on which financial centers are awake. Lien breaks the trading day into 3 major overlapping sessions, each with its own distinct characteristics and trading opportunities. The day begins with the Asian session, spearheaded by Tokyo, Sydney, and Singapore. Lien notes that this session is typically characterized by lower liquidity and tighter trading ranges. The major institutional players in Europe and the Americas are asleep, so price action tends to be more subdued, making it an ideal environment for range-bound trading strategies. Then comes the London session. London is the undisputed capital of foreign exchange, handling a massive percentage of global daily turnover. When London wakes up, volatility explodes. Breakouts occur, new trends are established, and the market establishes its directional bias. For the day, finally, the New York session comes online. The most volatile and heavily traded hours of the entire day occur during the overlap between the London afternoon and the New York morning. This is when the largest economic reports are released and the most aggressive market participants are battling for control. Lien emphasizes that knowing what time it is in the financial world is just as important as knowing what the chart looks like. The convergence of technical analysis, while fundamentals tell you what to buy or sell, technical analysis tells you exactly when to execute the trade. Lien takes a very pragmatic approach to technical analysis. She does not advocate for cluttering your screen with 50 different lagging indicators. Instead, she focuses on price action, major psychological levels, and the confluence of multiple technical factors. She teaches the importance of support and resistance, the invisible ceilings and floors where price has historically struggled to break through. These levels represent physical areas where buyers and sellers have placed their orders in the past. But Lien takes it a step further by incorporating multiple time frame analysis. If you are looking to place a day trade on a 15-minute chart, you must first consult the daily chart and the hourly chart to ensure you are not trading directly into a massive, long-term brick wall. By aligning your short-term entries with the long-term momentum, you drastically increase your probability of success. She also heavily utilizes moving averages to define the current trend and to identify dynamic areas of support and resistance as the market evolves. Fading the double zeros, now we get into the tactical meat of the book. Lien generously shares specific, actionable trading strategies that she has developed and refined over her career. One of the most popular day trading setups she details is a concept called fading the double zeros. Human beings are naturally drawn to round numbers. When a massive corporate client calls their bank to exchange currency, they rarely ask for a fill at a random, obscure decimal point. They ask to buy or sell at major psychological levels, like 1.2000 or 1.3000, because so many institutional orders and retail stop losses are clustered around these round numbers. They act like massive gravitational anomalies, Lien explains that when price approaches a double zero level for the first time in a while, it rarely slices straight through it. Instead, the cluster of opposing orders causes the price to bounce or fade away from the level. Day traders can capitalize on this by placing limit orders just ahead of the round number, catching the short-term bounce for a quick, precise profit. It is a strategy based entirely on human psychology and institutional market microstructure. The inside day breakout strategy for traders looking to capture slightly larger moves. Lien introduces the inside day breakout strategy. This is a classic volatility expansion setup. The market breathes in and out. It goes through periods of high volatility and wide trading ranges, followed by periods of low volatility and consolidation. An inside day occurs when the entire trading range of a given day, its high and its low, is completely contained within the high and low of the previous day. This visual contraction on the daily chart represents a market that is coiling up like a spring. Buyers and sellers are in a state of equilibrium, waiting for new information to act as a catalyst. Lien teaches that this equilibrium cannot last forever. When the price finally breaks out of the inside day's range, the resulting move is often explosive and sustained. The strategy dictates placing buy orders just above the inside day's high and sell orders just below the inside day's low, allowing the market to pull you into the trade. The moment the spring releases its pent-up energy. This strategy is beautiful in its simplicity and relies purely on price action and volatility cycles. The power of the carry trade, moving away from short-term day trading. Lien dives deep into one of the most powerful and historically profitable swing trading strategies in existence, the carry trade. This strategy is less about predicting short-term price fluctuations and more about capitalizing on the fundamental interest rate mechanics we discussed earlier. In a carry trade, you borrow money in a currency with a very low interest rate, and you use that borrowed money to buy a currency with a very high interest rate. Every single day, you hold that trade. Your broker pays you the difference in interest between the two currencies. Over
weeks and months, this accumulated interest can generate a massive return, completely independent of how the actual exchange rate fluctuates. However, Lien is quick to warn her readers about the dark side of the carry trade, because everyone is crowded into the same trade to collect the interest. When panic hits the global markets, everyone tries to exit the trade at the exact same time. This causes violent, crushing reversals. She teaches that the carry trade only works in a calm, optimistic, global economic environment. The moment volatility spikes and fear enters the market, you must abandon the carry trade immediately. Mastering currency correlations, another advanced concept Lien brings to the retail trader, is the study of currency correlations. In the Forex market, no currency pair exists. In a vacuum, the global financial system is an incredibly complex, interconnected web. If the United States dollar is gaining strength. It is likely gaining strength against everything: the euro, the British pound, the Japanese yen, and gold. Lien explains that understanding these correlations is a vital component of risk management. For example, the euro against the US dollar and the Swiss franc against the US dollar often move in opposite directions on a chart due to how they are quoted. If you buy the euro pair and sell the Swiss franc pair at the same time, you might think you are diversifying your portfolio, but you are actually doubling your risk on the exact same fundamental view of the US dollar. By STUDYING historical correlation tables, you can avoid accidentally exposing your account to massive concentrated risk. Furthermore, you can use correlations as a confirmation tool. If the euro is breaking out to the upside, but the British pound and the Swiss franc are failing to follow suit, that divergence is a massive warning sign that the breakout might be a fake out. The intermarket connection Lien expands the trader's horizon beyond just currency charts by introducing intermarket analysis. Currencies do not move based solely on their own internal dynamics. They are heavily influenced by other major asset classes, specifically commodities and bond markets. Take the Canadian dollar, for example. Canada is a massive exporter of crude oil. Therefore, the strength of the Canadian dollar is intimately tied to the global price of oil. If oil prices are surging due to geopolitical tensions or supply shortages, the Canadian economy benefits, and the Canadian dollar typically rises in tandem. Similarly, the Australian dollar is heavily correlated with the price of gold and industrial metals. Given Australia's massive mining sector, Lien teaches traders to keep a constant eye on commodity charts as a leading indicator for these commodity-linked currencies. Additionally, she stresses the importance of monitoring global bond yields, as the flow of institutional money into government bonds is the primary driver of the interest rate. Differentials that move the currency markets. The ION, rules of risk management, all the fundamental knowledge and technical strategies in the world are completely useless if you do not understand how to protect your capital. Lien dedicates a significant portion of her book to the unglamorous but absolutely essential topic of risk management. The currency market offers massive leverage, allowing retail traders to control huge positions with very small amounts of money. While this leverage can amplify your gains, it can absolutely obliterate your trading account if used recklessly. Lien's golden rule is capital preservation. She advocates for risking only a tiny fraction of your total account balance on any single trade, typically no more than 1 or 2%. By keeping your risk small, you ensure that a string of inevitable losing trades does not knock you out of the game entirely. She also emphasizes the non-negotiable use of stop-loss orders. A stop-loss is your emergency parachute. It takes the emotion out of a losing trade and automatically cuts your losses before they become catastrophic. She warns against the psychological trap of moving your stop-loss further away as the price approaches it, hoping for a turnaround. A professional trader accepts the loss, protects their SHL capital, and moves on to the next opportunity. The psychology of the professional trader. Finally, Lien addresses the ultimate battleground, the space between your own ears. Trading currencies is an emotionally exhausting endeavor. The market will test your patience, trigger your greed, and push you to the brink of panic. Lien points out that the difference between a winning trader and a losing trader is rarely their technical system. It is almost always their psychological resilience. She discusses the importance of discipline, the ability to sit on your hands and do nothing. When your trading system is not presenting a clear signal, many beginners fail because they feel the need to always be in the market, taking suboptimal trades out of sheer boredom or the fear of missing out. She also tackles the devastation of revenge trading, where a trader takes a loss and immediately jumps back into the market with a larger position size, desperate to win their money back. Lien teaches that the market does not know you, and it does not care about your feelings. You must approach trading as a cold, calculated business. You plan your trade, you trade your plan, and you detach your ego from the outcome of any single position, bringing it all together. Kathy Lien's book is not a shortcut to untold riches. It is a comprehensive, institutional-grade education adapted for the retail trader. She bridges the gap between macroeconomic theory and tactical, street-level execution. By reading her work, you learn to view the market not as a random casino, but as a complex, logical machine driven by central bank, policy, economic data, and human psychology. To succeed, you must embrace the hard work. You must read the economic calendar, understand the geopolitical landscape, draw your technical levels with precision, and guard your trading capital with your life. The currency market is a harsh teacher, but for those willing to put in the time and study the mechanics detailed by Kathy Lien, it offers the ultimate frontier of financial independence. Final thoughts for the journey as we wrap up this extensive summary. I want to leave you with one final thought inspired by Lien's work. Trading is a journey of continuous learning. The market is constantly evolving, driven by new technologies, unprecedented economic events, and shifting global power dynamics. The strategies that worked beautifully 10 years ago might need to be adapted for the market conditions of today. But the core principles, the flow of capital toward yield, the psychology of support and resistance, and the absolute necessity of risk, management will remain true as long as human beings are trading money. Thank you so much for joining me on this deep dive into day trading and swing trading the currency market. I hope this storytelling breakdown has provided you with a clear, actionable understanding of how the foreign exchange world truly operates. Keep studying, keep protecting your capital, and keep evolving your edge. I will. See you in the next video.